If you have student loans, it's pretty likely you understand their exact impact on home buying. But in today's video, we're going to talk about the statistics behind student loan debt and home buying. Stay tuned. A report was released recently in January of 2019 by the Federal Reserve Bank outlining how student loan debt impacts home buying for young adults. In that study, they estimated that 20% of the reduction in homes purchased by adults aged 24 to 32 was because of student loan debt. Overall, homeownership has declined about 4%, from 69% in 2005 to 65% in 2014. Young adults more acutely experience that decline. Homeownership among adults aged 24 to 32 declined 9%, so more than double the overall average. About 45% of adults in this age group owned homes in 2005. That number is down to 36% in 2014. The Federal Reserve Bank estimated that a $1,000 increase in student loan debt balance decreased the rate of homeownership for adults in their late 20s and early 30s by 1 to 2%. This information is interesting, but if it's taken out of the context of the overall trends of student loan debt, it can be a little hard to interpret. One thing that I think is key here is that the balance of student loan debt for all age groups is going up. And that student loan debt increase is a direct result of increasing cost of college education. If you got a four-year degree from 1980 to 1984, that would have cost approximately $9,882 in constant 2017 dollars. That's for all 4 years of that education. If you would have gotten that same four-year degree from the period of 2013 to 2017, that degree would have cost $35,087. That represents a 355% increase. And student loan debt has gone up accordingly. Unfortunately, average student loan debt wasn't well tracked in the 80s. But in 1996, the average student loan debt of a four-year college graduate was $12,750. And today, the average debt of a four-year college graduate is $29,650. The level of student loan debt is rising according to the cost of college. Homeownership isn't only represented by the young. We're also seeing declines in homeownership across age bands. Student loan debt could be contributing to that as well. According to a Merrill Lynch report, parents spent $500 billion on their adult children aged 18 to 34. That's more than twice the amount they've invested for retirement. There's over $86 billion in outstanding student loan debt owed by adults over the age of 60. And 2.8 million student loan borrowers are over the age of 60. Of those borrowers, nearly 40% over the age of 65 are in default. The overall balance of student loan debt for all borrowers is over $1.5 trillion, and there are over 44 million borrowers. Student loan debt is the second highest consumer debt compared to mortgage debt. It outranks credit card debt and auto debt combined. It's no wonder student loans are impacting the ability of borrowers to afford a home. Now that you have a little bit of background, next week I'll record a video about strategies for home buying and the approach to home ownership when you have student loan debt. As always, if you liked this week's video, please give me a like and hit that subscribe button. There's a new video every Wednesday. We'll see you guys next week. Bye!